Something big is happening in the markets and it could take place at any time. This is a very timely video and you are going to be glad that you watched. Let me show you the charts to share with you what I'm seeing right now. So what we're looking at is the SPY, and I'll zoom out a little bit for some context so you can see the trip that we've been on with a lot of this sideways movement. If you go right about the middle from where we're at, and the fact that the S&P has failed to break previous highs. However, when we look much more closely at where we've been in recent days, you can see pretty much we've failed to move significantly up or down from where we're at, where we are above 4,000 in the S&P, but we're still below that 4,200 mark. And I really think that over the next several days, certainly within the month of April, we're going to either break down below 4,000 or we're going to break up above 4,200, depending on what we hear from corporate earnings. That is going to be crucial, critical, important. And I said that this was a very timely video because that means that Thursday is the last day that you have in the markets before anything happens on Friday, hearing from BlackRock, Wells Fargo, Citigroup, PNC, JP Morgan. They all start to report earnings on Friday, and I believe that a lot of them, if not all of them, are before the market opens. So that is highly critical that you have this information today before the market opens, so that way you have some time to plan and decide and do your own research and see what you're seeing as well. Now, when we look at the Qs, you can see we've had pretty much the same behavior over the past several days, hitting a hard stop at about $318. And this is tracking the NASDAQ 100 and also hitting a hard bottom here at about $313 and very, very resistant to move outside of that range of values. However, when those earnings hit, if we get talk of recession, if we get economic weakness for outlooks, especially if we get a weak Q1 and economic weakness, these indices, in my opinion, are probably going to drop pretty hard, pretty fast, especially if we get evidence that we already likely are in a recession or that we're going to see a recession. And of the significance of the recession, we could see that drop in the S&P or in the Qs, and that's something that we want to be prepared for. With a big move coming, there are things that we can do to plan for it. We can hedge against shortcomings if we get that recessionary talk. If we find out that we actually have strength in the economy, we can plan long positions to move in that way. You could do spread option plays to take advantage of short-term volatility. And with some of the price movement that we've seen, we could actually have a lower implied volatility. Now, it's not something you want to keep a hold of for long periods of time, because that's something that will bleed away. You'll have a theta decay. That time value will eat away at options that you purchase. So if you are the seller of those option contracts, of course, then time is on your side. You want that theta decay because you want those options to expire worthless or to be able to close them out at a lower premium, to buy to close at a lower premium than what you received in the first place. None of this, by the way, is financial advice, just talking about opportunities in the market and different plays, I'm trying to avoid the word options, different choices that you have, whether it's with holding stock directly, holding options that are out there. And you should know your risks for however it is that you're going to play these things, and that you should be well versed into what sort of risks you stand to take on by doing any sort of trading or investing in the stock market. Please protect your downside. That's something that you need, that capital to stay in the game. So like I said, not financial advice, just sharing with you opportunities that I see. I think by Friday at the earliest, we could see a big move in the markets. We get PPI today at 8:30. Perhaps by the time you watch this video, we already have the results of that. I expect them to be pretty much in line with consensus, pretty mild, being what we got in the last PCE, the last PPI, and also this last CPI, the latest numbers. I think that we're going to see a very similar story as PPI comes through. If not similar, I think it could pull a little bit to the downside on inflation, and that could be a little bit of upward pressure for us, but still the big catalyst comes in on Friday with the biggest round of corporate earnings with economic outlook. And so you should just be aware to watch those and be ready for any sort of movement that we have. So there has been a lot of talk of recession. It's what a lot of people are predicting. And well, that's something that, I really think about, especially in the second half of the year. And I've said it for my videos for quite a while now, including when the moratorium ends on student loans. I think it's going to be an even bigger drag in that later half that we have. And especially if the Fed doesn't cut rates, that's also something we need to be concerned of. So while we're looking at the Qs, just let me give a little bit of indication here on what I see happening with it. So down here, right about 313, that's where we're currently finding support and resistance right across the top, right at about 318. So breaking up above this peak, that could definitely happen if we get strong economic outlook coming through the corporate earnings and strong earnings coming through. That could definitely break us up above resistance. That could allow us to try and retest this 332 and really keep the rally continuing. That fear of recession is keeping a muted price action here when we look at the Qs and when we look at the SPY. I do want to take a quick moment to let you know that this app that you're currently seeing is Moomoo, and by using my link down in the description, you can get up to 15 free stocks by signing up and making a deposit of $100 or more. When you deposit $100, you get 5 free stocks and free premium courses, so you can really up your level of knowledge and your trading game. And then for a $1,000 deposit or more, you get all 15 free stocks and the free premium courses. And to boot, there's a financial literacy US paper trading competition going on right now. Winners of that competition get $1,500 cash coupon into their trading account and also 1 month of Bazinga Pro for free. So check out that offer down in the description. Also, one final thing before we get back to it. If you like my commentary or want to hear more, check out that link for the Patreon down in the description. Not only do you get access to my Patreon exclusive content and become a member of my private Discord community, but you also get access to my Tesla stock price prediction spreadsheet that I have over there, as well as the video commentary that I have. With that said, let's get right back to the chart. So as long as that debate stays around, like I said, whether the Qs, whether the SPY, doesn't matter. As long as that debate is being had, we don't exactly know which way the price is going to move, but it is most definitely worth looking at. So what's my take on all of this? Well, I have a short hedge position built out that should we get that forecast for economic weakness, I'm ready to go and ready to capitalize on it. And if we get a story of economic strength instead, well, then I have my long positions still ready to go, still ready to capitalize on any price action that we see. So keep your eyes on the markets, keep your eyes on the earnings, and I hope that this video serves you very, very well. So thank you guys for watching this video. I really appreciate you sticking around this long. Like this video, subscribe, ring that notification bell to see anytime that my videos come out. Don't forget about that Patreon membership. Find that link down in the description. Also, that Moomoo link. Sign up, get your free stocks. You're supporting yourself and helping to support this channel. I am Dr. Stock, Doctor of Education. We'll see you in the next video.